Welcome back to Markets at Noon, and let's connect with Ashish Kehair, who is the MD and CEO of Nuvama Group. Hi Ashish, good afternoon. Shrishti this side, and good to be speaking with you. Ashish, on the Indian equities, there's a lot that's been playing out in terms of the weakness in the earnings, a bit of a slowdown there. There are some concerns regarding the Trump tariff and sanctions. But amidst all of this, Ashish, help us understand that what is the sentiment that you are picking on the ground, and especially from the FIIs, because they have been sellers since the start of the day, and it's been quite intensified selling that we are seeing. But what's the sentiment building line given the recent correction?
I think from the FPI side, I've been spending time now for the last 2 days. And if I were to, let's say, just contrast this with when I met them during election, and let's say maybe 6 months prior to that, their outlook and the way of looking at things is now changing. They've always been bullish on the Indian markets. They've structurally been bullish, but they have to look at relative valuations. And relative valuations in India had actually, I would say, front loaded. And maybe this correction now will give them again a chance to come back, because structurally they all believe in the story of India. And when I asked them about their sentiment as to how they felt after meeting corporates, they said that they were reasonably positive because corporates were sounding okay. Yes, there are midterm impacts of tariffs and earnings and all that, but it's a part of a cycle. And if everything is okay, you never get markets at the right valuation. So you need to really time it, which I think we will see maybe play out in the coming months.
Right, so it's all about the timing, and you're never going to get that right, especially given the kind of fall off that we have seen recently. But also give us a sense of some macroeconomic indicators. We are seeing some global challenges and volatility. What's your outlook for the global wealth management industry in general going ahead?
See, the way structurally we look at it is that people are not going to save less over long periods of time. If you look at India as an economy, the per capita GDP is only going to go up from here. So we sometimes confuse the market valuations and market movements in short periods of time with overall business macro. Now, what is our business? Our business is basically taking money from savers and placing it in the right place so that they can meet their goals. And if you look at the structural journey of India, under no circumstance can you say that this is going to, slow down, or you see any permanent damage in that happening. If you take a 5-year view, people are only going to become wealthier, whether by way of their investment earnings or by way of their salaries or by way of their business earnings. And as and when that happens, the deployment will happen into investment products. So I see no dent in the wealth management industry per se. In fact, my view is that it's a long-term 10-year structural trend which is not going to get impacted. Yes, there will be short-term bouts of such volatilities which will keep on happening, and those are times when you have to just stay afloat and keep moving ahead.
All right, but one of the other data points, Ashish, we were just tracking is the mutual fund data, and just a while back we had that AMFI data as well, which stays strong amidst the market volatility. And Ashish, we understand that Nuvama too has applied for a mutual fund license. Give us some sense there, what is the rationale behind this move, and how do you see the industry growing in terms of the SIP data and the overall participation, especially from the retail investors?
So your question has two parts. One is our application of the license, so that I'll clarify first. We've not applied for a license to go for a full-fledged retail mutual fund as of now. SEBI had released a guideline around special investment funds in which you are able to replicate some of the strategies which are today done through AIFs, where the minimum ticket is 1 crore, and that now can be done at a 10 lakh level. And if the government and the tax authorities allow the taxation, which is similar to mutual funds, where taxation incidents happen only at the time of redemption, unlike an AIF where it happens whenever AIF trades, there can be an advantage by moving those strategies into that vehicle. That has been our thought process for applying this license. Your second question is about retail participation on SIPs and what is going to happen to them. Now, I'm saying again, you have to break it down between short term and long term. Short term, people will be driven by the sentiment of the market, but my contrary view, and I want to just put that point of view, that these are the times when actually SIPs come into play. If hypothetically you think that the market should go only in one direction and which is up and up, then you might as well do a lump sum, right? There is no point in doing an SIP because you're averaging up your cost. These are times when you see panic reactions and one doesn't know when the panic will end. So you have to be careful. But if you keep equally investing and your horizon, the third bucket is of course your horizon has to be long. If your horizon is 2-3 years, anyways, equities is not the place to be, irrespective of the market capitalization, because equities can undergo periods of volatility in short periods of time.
Absolutely, point taken. So while we are talking about this volatility and especially given the way the markets have been acting right now, what would you recommend is the ideal asset allocation mix in one's portfolio?
So it typically depends on the objective risk appetite of the client. And when I say objective, time horizon becomes a very, very big component. And risk appetite is not only financial risk appetite, it's also emotional risk appetite. That if your portfolio is down, like let's say by 20-30% in a short period of time, will you be tempted to redeem? If the answer is yes, then you should be heavier on fixed income, lesser on risky asset classes. But if you are one of those who can stomach that and add more, then you should tilt it towards equities, provided you have a long-term horizon. So first and foremost is your time horizon, your risk appetite, and your objective. Those three have to come together to decide the asset allocation. It can't be a cookie cutter which fits everybody. Like I can't give a single asset allocation which will fit everybody's profile.
All right, but with this, Ashish, we'll let you go. And thank you so much for taking the time out and speaking with us. Indeed, a pleasure.
Thank you for having me here. Thank you.
All right, but with this, viewers, it's once again time to slip into a very short break, but the market recovery continues, and that's what we are tracking, but we'll keep tracking that on the other side.